For any merchant, comprehending the inner workings of credit card processing can seem overwhelming. A complex web of interactions unfolds behind the scenes every time a customer swipes their card to complete a transaction. The operations involved are intricate, a fusion of technology, financial institutions, and protocols working synchronously. This video seeks to dissect the transaction process, examining key players, technologies, and why merchants need to be well-versed in these systems to ensure optimal business operation. Issuing the credit card, the beginning. Before diving into transaction processing, we need to understand how the credit card comes into existence. Credit card issuing begins with banks or credit card companies, commonly known as issuers. These entities issue credit cards to consumers, usually after a detailed scrutiny of their credit history. The card carries information, both visible and invisible, including the cardholder's name, the card number, and a magnetic strip or an EMV chip. The latter two store data needed for every transaction and secure against potential fraud. Transaction initiation, the card swipe. When a customer swipes their card or inserts it into a card reader, the transaction journey starts. Modern card readers can extract information from the card's magnetic strip or EMV chip, initiating the payment process. In the case of online transactions, customers input their card details manually. Both methods provide the same information needed to process the payment, namely the cardholder's name, card number, card expiration date, and the CVV or card verification value. Payment gateway and payment processors, the essential intermediaries. At this point, a payment gateway and a payment processor come into play, serving as the crucial link between the merchant and the credit card issuer. The payment gateway is an e-commerce service that authorizes credit card payments, especially for online retailers or businesses that lack a point-of-sale interface. Think of it as a digital equivalent of the physical POS terminal. It encrypts sensitive information such as the credit card number, ensuring data is passed securely between the customer, merchant, processor, and the issuing bank. The payment processor manages the transaction by transmitting data between the merchant, the issuing bank, and the acquiring bank. It provides the technology and infrastructure needed for online payment systems, ensuring that the transactions are carried out swiftly and smoothly. The approval process, authorization request, and response. Once the card information reaches the payment processor through the payment gateway, the payment processor forwards the information to the merchant's acquiring bank. The acquiring bank then sends this data to the customer's credit card issuer through the relevant card network, Visa, MasterCard, Discover, or American Express. The credit card issuer validates the transaction against several parameters, verifying the card details, checking if the cardholder's account has sufficient credit, and scrutinizing for any signs of fraud. Based on these factors, the issuer either approves or denies the transaction. The approval or denial, known as the authorization response, is then sent back through the card network to the acquiring bank, then to the payment processor, and finally back to the merchant's payment system. All these steps happen in real time, typically taking just a few seconds. Transaction completion, clearing, and settlement. Post-authorization, the approved transactions are stored in the payment system until the merchant decides to settle them, usually at the end of the business day. The settlement process involves sending all approved transactions in a batch from the merchant to the acquiring bank, which then forwards the batch to the respective card network for clearing. During clearing, the card networks redistribute the transactions to the issuing banks, which then charge the cardholder's account for the transaction amount. The issuer transfers the funds, minus interchange fees, back through the card network to the acquiring bank, which finally deposits the money after subtracting their fees into the merchant's account. The significance for merchants. Understanding credit card processing is crucial for merchants for various reasons. Firstly, it helps merchants make informed decisions about payment infrastructure. For example, small businesses may prefer simpler, integrated solutions, while larger businesses might need advanced, customizable options. Moreover, knowing the processing mechanics can help merchants better navigate transaction fees. Different processors have different fee structures, and knowing how transactions are processed can assist merchants in choosing the most cost-effective option. Also, understanding the journey of a transaction can provide insight into identifying and mitigating possible points of transaction failure, declines, and fraud. Further, as the world shifts towards digital payments, an understanding of the credit card transaction process becomes even more vital. It can help merchants ensure they adopt the right technologies and stay on top of trends, ensuring seamless, secure transactions for their customers, thereby gaining a competitive advantage in the increasingly digital marketplace. While the credit card transaction process may seem complex, it is, in essence, a series of swift, secure exchanges between different players. As merchants, understanding this process empowers you to make informed decisions, negotiate better deals with your payment processor, mitigate fraud, and overall provide a smoother customer experience. In a world where commerce and technology are increasingly entwined, knowledge of the payment process is not just beneficial, it is essential. For more tips and insights to elevate your payment strategy, visit us at next.io.